Hello, I'm Alex Davies, founder of Wealth Club. Today we're going to focus on University Spinouts. These companies have the potential to unleash game-changing technologies and the bigger ideas of tomorrow. And choosing the right ones to invest in could prove extremely lucrative. Cambridge University alone has spun out 15 companies valued at more than $1 billion. And 2 of these are now worth more than $10 billion. But getting access to these investments has for a long time been the preserve of angel networks and well-connected individuals. So if you're interested in backing university spin-outs, how do you go about it and what should you look out for? Today I'm joined by 3 guests who are experts in this area: Enrico D'Angelo of Parkwalk, Sandy Reid of Mercia, and Tom Hockaday, who has over 20 years' experience leading university technology transfer offices. First off, Tom, can you just give me an idea, what is a university spin-out?
A university spin-out company is a new company set up to develop technologies, ideas coming out of the university. So it's all about the academic researchers at the university doing their research, looking at the research outputs, looking for commercial opportunities from those, and then spinning them out into a new company where you combine the university expertise, the investment and the management to start and grow the company.
Sandy, you invest in these kind of companies. Why is it such an area of interest? Why should I consider investing in them?
So university spin-outs are early stage and high risk investments, but they do provide an opportunity to make a significant return on that investment. An example would be if you seed a company at an early stage and stay with it as it goes through, you can make a significant return. Within the Mercia portfolio, a good example is Blue Prism, which was seeded with 900,000 and has provided over 100 times return for that particular fund. Another university spin-out is Alinea from the University of Warwick. And in that situation, there were EIS investors involved with that business, and they got a 26 times return on their investment. So there's a lot of compelling commercial reasons to be involved in university spin-outs.
And Enrico, have you got any other examples of why this is such a good area to be investing in?
Well, I think also you've got to look at what the government's doing. The government is actually focusing the tax-efficient space onto knowledge-intensive companies, and the university spin-outs are knowledge-intensive companies. So it's focusing investment into this space. It's trying to encourage the growth of these high-intensity technology companies so that they can succeed and give back to the economy and UK PLC. So there's a lot going on in this space, and it's, you get range from one end, as Tom said, it's a brand new company, academics, bit of investment, seed, and it grows into some game-changing technologies in this country. Your stats from Cambridge, the most recent one was Arm. Arm was a Cambridge University spin-out, sold to SoftBank for £24 billion. So it's a lot going on in this space. And
an interesting connection there, Alinea was actually sold to Arm. That was the exit that was achieved for Alinea.
And what about other successes? Any successes particular to Parkwalk?
We've had 2 exits this year already. We've had one that was 100 times return for the original seed investors. That was happened to be a Cambridge company. We've the range of successes in this space are actually outweighed by some of the non-successes. There are losses. I think people have to be aware that this is a risky area of investment. So they have to be prepared that not everything will succeed. But I think one of the key factors in investing in spin-outs is the fact that they tend to succeed much better than other companies, other startups in this space. I think Oxford University Innovation recently published a stat that 87% of university spin-outs succeed or are still in play after 10 years. I think the national for other startups is 50%. So you can sort of see by their sort of very nature, they have more chance of success, and the technologies are inherently sort of game-changing in a lot of instances.
Tom, who invests in university spin-outs? Is it institutions? Is it individuals?
So, I mean, a point to make is that before the company actually is spun out and comes into existence, there's been an awful lot of sort of investment and support that goes into that, and maybe we'll talk about that in a moment. In terms of the financial investors in the first round, as you mentioned in your introduction, I mean, typically in the old days it was angel investors, wealthy individuals, high net worths, followed by Again, in the old days, there were a small number of sort of seed and venture capital funds that were investing in this space. What's happened in recent years, and with the EIS opportunity, is a far wider range of potential investors, either investing individually or through firms that we're going to be talking about today here in managed funds. So you've got a wider range of investors now coming in.
Following on from Tom's point there, that's very much at the early stage. The landscape's very much changed, I think, now, because there's a lot more money and investment being attracted to this space. So in Oxford, you've got Oxford Sciences Innovation, a £600 million fund. In Cambridge, you've got Cambridge Innovation Capital, and these companies are backed by big institutional investors. And you're also seeing that the university spin-outs that succeed, gain commercial traction, are much more mature, are attracting now pension fund money, they're attracting sovereign wealth fund investment. So there's quite a wide range of investment that's going into these spin-outs. And again, it ranges from the seed type investors right through to those more mature institutional investors.
So that's good for investors at an early stage because they've now got someone to buy them out at a later stage.
That is a good question. Yeah, that is actually something that hasn't been happening as often as I think people would like. I think there's much more M&A and sort of trade acquisition activity at the moment. But what we're seeing now is people are trying to invest in some of these companies, and hopefully that will offer the opportunity to take out some of the earlier seed investors, particularly from the sort of early stage EIS funds that are playing in this area.
Tom, you come more from the university side. You sort of run tech transfer offices. Can you explain to viewers what that actually involves? What is a tech transfer office, and what do you do in this world of university investments?
Certainly. So technology transfer offices are part of the university. All research-based universities have one of one sort of size or shape or another. Sometimes administrative offices within the university, sometimes wholly owned subsidiary companies, such as I ran in Oxford. And what we exist to do is to help researchers in the university to commercialise the results of their research when they want to. And that involves doing a lot of evaluation of research outputs, a lot of protection with intellectual property, patents, copyright, etc. And then trying to find the right route to market for a technology. Two sort of basic routes, licensing the technology to an existing company, or putting it into a new spin-out company that we're talking about today, and building the management team, developing a bit of a business plan, and finding that first round of investment.
So when you spin something out, how developed is the business, and can any of generally, I assume, filled with academics, can they actually run a business?
So various points to make. I mean, there's two sort of key things that are happening before the company spins out, which are of sort of huge benefit to potential investors. So you've got all of the underlying research that's going on in a university, hundreds of millions of pounds worth of research, in the UK, billions of pounds a year. And that is researching every possible topic, research area, subject you could imagine. Some of that has got commercial potential, and that's where the Tech Transfer Office comes in. And the Tech Transfer Office, also funded by the university with government support, etc., they are doing a lot of work at protecting the opportunities, so filing patents. And so far, the new spin-out company, the investors haven't spent a penny. This is all being provided towards the investment opportunity. And the tech transfer offices these days increasingly have got access to proof of concept pots of money where they can put maybe 50k, 100k, or a little bit more sometimes. So again, sort of pre-spin out, first round financial cash investors coming in. There's an awful lot of work that's been done to present these projects as investable opportunities.
And that technology transfer function within universities is actually critical to investors coming in. We spend a lot of time working with the technology transfer teams at a variety of universities, whether that's more formally through partnerships, which we have with 19 universities, or whether that's on a more informal basis. But we really rely on those people to be presenting us with deal flow and opportunities. we like to go in early and sit alongside those technology transfer teams to really help build the propositions and bring a more commercial flavour to it. Maybe that sourcing management team, for example, or non-exec directors to sit alongside the academics to help really put the commercial business case together.
And would that typically be the case? You would be employing a sort of outside team to commercialise it?
Well, I think there's a variety of ways of doing it depending on which university and what structure they have, because that's one thing to bear in mind, that they don't all have a uniform approach to spinning out businesses. So if they've got their own proof of concept funds, they may well be looking to put some sort of management structure around it pre-investment. We're happy to work alongside universities attempting to do that. With being an institutional investor, it means that perhaps we can draw in some more experienced people to look at those than perhaps a local or regional university can do for themselves.
I mean, coming back to your question about do academics make good business people, I mean, the short answer is no. There are exceptions, without question.
I think one exception, happens to be an Oxford one, is Nick Hawker has been paraded. He was an outstanding academic. And has created a company called First Light Fusion, which, as the name suggests, is trying to develop and prove clean energy. And he's an incredible person. He's created that company and has been running it. But I think Tom's absolutely right. In general, the academic founders tend to be involved as chief technology officers or chief scientific officers. But in the main, as a combination between the investors and the technology transfer officers, the spin-out tends to come sort of ready-made with a management team in place. You know, you tend to have someone there as a CEO sort of drive that company forward, and at the moment, I think chief operating officers are also quite critical. A lot of the new spin-outs now are developing technology that needs to be productized, to use a word. And so, you know, there's a lot of experience out there from people who've run these startups before. In terms of supply chain, sourcing goods from abroad and all that sort of thing. So it's quite key that it's not just, I think this is the perception, has been in the past, that it's a mad professor who's been given a lot of money and, you know, he just goes off and buys himself a car and then tries to do something. It's very much changed from that. It's very much professional management that are brought in alongside the academic. You're relying on the technology transfer offices to make sure that that technology and the patents are rigid, and the investment takes the thing forward from there.
And it is, as Enrico is saying, about building that team of people. So it's the researchers, maybe a professor, maybe mad or not, you know, senior academics, some younger junior researchers as well. Quite often, the senior academics will stay in the university because that's their life, that's what they want to do. A younger researcher may well move into the company and become an employee of the company. But what we're all trying to do is find some management, some entrepreneurial management who can join that team, supported by the investors. So when you've got that team of the sort of the founding researchers, some early stage management, some early stage investors coming in, then you've got a team of people who are capable of making this thing really happen.
And Sandy, weren't you yourself in a university spin-out and running?
I was a long time ago in my career now. I raised investment for and ran a university spin-out from the University of Nottingham for 8 years. And it's given me a lot of insight into how these transactions can operate and some of the challenges at startup, but also the ability to succeed in those businesses.
So what are the typical challenges they would face?
Well, we've touched upon one already, which is around management team. And also, I mean, realistically, negotiating with universities at the very beginning can be a little bit of a challenge to get the deal put together. But once the company started, it tends to face the same challenges that all early stage startup businesses do in the technology space, about getting market traction, achieving revenue, being able to interact with larger corporate customers. So in some ways they're very similar to nearly all startup businesses.
And are most of the successful startups, are they in one area? Is it technology? Is it medical?
Speaking from a Mercia point of view, we look at technology specifically. So we keep a lot of in-house specialists to help support the companies and also to help analyse the investments that we're going to make. So that's across life sciences, software, digital, and then a sort of catch-all bag of manufacturing, engineering and materials. So we run a combination of sort of investment specialists that go out doing deal sourcing, but we back it up with specialists so you can actually look in depth at technologies and what those markets look like.
But I think another key factor here is that it can be, remember there's lots of global technology companies, they're all looking for sort of discrete bits of technology, and so what you tend to find is that some companies, the big technology companies do follow UK University Spinouts quite closely, and obviously at some point when it's in their interest to acquire a technology, they will actually swoop in and acquire it. So an example we had a number of years ago was a company called Vocal IQ that was actually acquired by Apple. And actually, Vocal IQ's technology is now the Siri within the Apple iPhone. And at the time, that was a competitive landscape between Apple, Google, and Amazon. And Apple fell behind, and they leapfrogged that technology by acquiring that Cambridge Spinout. So there's a lot going on in this space, in terms of acquisition and people looking at different bits of technology to fit in with their current products.
And are there any particular types of company you at Parkwalk look specifically for? Or?
We're agnostic in some respects towards the technology. I think the technology can come in waves. You might have one university that spins something out in a certain life sciences type environment, and suddenly every other university wants to try and spin out something along the same lines. But what we're seeing at the moment, I think, is more platform type technologies. Again, we're investing in some companies that are sort of developing effectively, a lot of it's all around AI and machine learning, around reading genomic data, reading scans that people have sort of from CT scans, and effectively then being able to diagnose whether people can get dementia, or they can diagnose what risk you are of a heart attack, things like that.
There definitely are trends in this, and the buzzwords and the jargon, augmented reality and autonomous vehicles, artificial intelligence, etc. But a point to bear in mind is that the opportunities are created by what the researchers are wanting to research. And so you've got investment opportunities based on, the latest ideas, the latest thoughts from the brightest people in the land, and that's what makes it so exciting, combined with the market pull and the investor pull, and that's when you see the success.
So an example of I think a sort of cutting edge investment that we've made in an area of investment is we've recently invested in a company called Oxbotica, which is autonomous vehicle software. So it's basically all about driverless cars. So at the moment, the real issue with driverless cars is the vast amount of data that comes off the sensors that allows the car to effectively do what it's supposed to do without a human being in charge of it. Oxbotica are basically taking just the software. All they want to do is develop the platform to allow that software to be put into other cars. And it's all about machine learning, it's all about artificial intelligence, but it's also about consuming vast amounts of data from all the sensors from the car and being able to analyse that data and make a decision. So it's quite key, and it encompasses a number of areas from research fields. As I said, machine learning, artificial intelligence, sort of predictive analysis. There's a lot going on in just this one company.
So we touched earlier about all these different sort of institutions, etc., looking to invest, pension funds. If I want to get in now as an individual investor, what's my best bet? How do I go about it?
I think you look for a specialist EIS fund that invests in University Spinouts, and you have two here that do exactly that.
So what else, other than identifying the investments, what else do you add? Are you actively involved in the company on a day-to-day basis, or are you just presenting me an investment and giving me a portfolio?
I think you need to understand that the level of involvement changes over time with the University Spinout. There are some entities that can spend day-to-day into a startup company, but in general, the companies with the spin-outs, because they have professional management, they do have the support of the investors, and the professional investors do have a lot of skill sets that they can bring to the company. They're not just bringing money, they're bringing their experience as well. I think that's quite key. Our portfolio now is 85 companies, so we can see a lot of trends. We can sort of analyse what's going on in one sector and apply it to a brand new company. As Sandy mentioned, we've got our own internal search function to help companies bring in chairmen, CEOs and other sort of C-suite type executives. So there's a lot that we can add. It's not just money.
I think that's an important point, particularly around as the companies grow and change, there'll be new requirements in the management teams as those businesses grow. And as with Parkwalk, we provide that type of function as well. I think one of the points you touched on there, though, with the the university spin-outs tending to be earlier stage businesses, and that does produce an amount of risk. And so diversifying your portfolio across a number of companies is probably the best approach. And as an individual angel investor, that can be quite difficult to do, even if you do get your EIS tax relief. So by using a professionally managed fund that allows you to diversify across a range of investments from different university spin-outs, or at Mercia we do a blended portfolio with university spin-outs and more traditional commercial businesses, it allows you to spread your risk in this sector.
I mean, another great benefit that we saw when managed funds began to sort of appear on the scene was their network power. So the networks that these guys have and other, sort of fund management, institutional investors, etc., is fantastic in terms of pulling the technologies closer to market. So I mean, it's what has already been said, plus who they know through other investment activities, who they know in big existing companies who can help to pull the companies to market.
Yeah. And I also think, in terms of risk, I think one of the key risks in this space, and we've talked about management, we've talked about the technology and how with the technology transfer offices, the work they do tends to de-risk an element of the technology risk. The investors bring the money. You've got management involved in there, but one of the key risks is that these companies inevitably need further funding rounds. It's not just one investment. I think that's a big difference from an angel club or an angel investor, which is why investing with a sort of professional fund management firm, you're in there, you're investing alongside other investment partners. So it's not just one firm investing, it's generally a syndicate of investments. And again, that's quite key, because if these companies might start raising £1 million, but 4 or 5 years down the road they'll be raising 10, 15 million pounds, and you need to have the right shareholder base to be able to fund those companies at that point.
And is there a risk that there's just a few people in the market and you're all buying the same things just at different stages and you're all owned by the same people, whether it's Touchstone or whether it's IP Group, Neil Woodford?
I think there are a variety of players, and I think Parkwalk and Mercia make a good example there. So Mercia focuses into the regions rather than London South East, and particularly in terms of university spin-outs, the Golden Triangle, whereas I think I'm correct in saying Parkwalk has much more of a focus around the Golden Triangle. So between us, we're not necessarily fishing in the same pool the entire time.
And I think that the sort of some of the names you mentioned there, they're very much, they can only put to work larger sums of money. We're investing so we're investing from the new company seed stage right through to with the knowledge intensive limits. We're investing in potential funding rounds of up to £10 million of just EIS money. So there's quite a significant spread. There's more. I can't remember the exact stat, but effectively these companies know that there is not enough money out there to fund them all. And I think what we're doing is we are using our expertise to pick what we feel are the best investments and backing those companies.
And you're getting enough opportunities?
We're certainly seeing a significant amount of deal flow. I think in the last financial year we looked at 131 opportunities from regional universities. We, as Mercia, invested 15 million into those. Not every single one of those 131, I should add. But we had another 13 million or so of co-investments sitting alongside. So that certainly shows that there are enough opportunities. I think the discipline of investing into university spin-outs is to continue to back the ones that are being successful and to identify the ones that aren't successful, so that you don't end up exposed across the board. And I think that's another advantage of using a professionally managed fund to do these types of investments.
And there are quite a lot of incentives on universities to increase the number of opportunities that there are for new companies. So, part of the government support of universities is now based upon the amount of impact that universities can generate. And that's a very diverse concept, but one part of that is impact through commercial development of opportunities and new spin-outs. So there's sort of some push factors increasing the likelihood of there being good deal flow opportunities coming through, and then the pull in terms of the amount of money that's coming into it. And I think a point to make about the investor base, this is where it comes back to the EIS. I mean, the EIS offers such, and the SEIS offers such huge benefits that more and more individuals, not just the mass institutional investors, are getting involved in it. So there is a more diverse base.
There's a more diverse base, and in terms of deal flow, I think, as Tom says, the universities are incentivised to create new spin-outs. But I think that the thing that people forget is it's not just at the beginning. There is a sort of funnel effect here, and you've got to remember, looking at a portfolio, there are more mature companies who are just about to sort of reach that, gain that commercial traction, and they're raising bigger quantums of money and investment. So there's a wide range of investment. I mean, to give you an example, we've in our opportunities fund, we've raised just over £60 million, and we've invested £54 million this year. That's into 24 companies, of which 8 of those companies were brand new spin-outs that we've never seen before. So there's a wide range of activity, and that's Parkwalk. You add in the activity in Mercia and some of the other names you've mentioned, and there's a massive amount of activity going on. I think IP Group recently had a statistic that said for every £1 they invested in their companies, those companies required £7 of further investment.
So that brings me to the question, will I ever get my money back, or is it just a constant putting more and more money in and hoping at some time there'll be a return?
Well, the key factor in the EIS space is returning cash back to investors. Parkwalk has returned over £25 million in cash to investors over the last 3 years. So these are across 19 exits, of which 8 of those have been positive and 11 have been negative. So, but this is the factor in this space. It's one of the key characteristics that when these companies succeed, they succeed incredibly well. You've had some of the returns that we've both mentioned, but it's also in terms of the cash multiple that's returned back to clients is significant. And they actually, in a lot of those instances, those investors got their entire EIS subscription back.
I think the reality is with investing in university spin-outs, when you do make a good exit, it makes a very significant return, but there is risk in there, as Parkwalk have already outlined. And when you have that sort of challenge, diversifying your portfolio is a good strategy to cope with that. The other reality is that we tend to do earlier stage investing, and that means that the money is going to stay in those businesses for longer. So at Mercia, we're targeting sort of 5 to 7 years to provide a return for our EIS funds, and we're usually targeting a 3 times return on money over that time period.
And Tom, you've been in this game a long time. How's it changed? How's universities' attitude to commercialising these businesses, ideas? How's that come along? And
I mean,
how also do we compare with someone like the States, which we were always trying to mirror before?
So, I mean, it's changed enormously. It's continuing to change. But thinking back to 20, 25 years, there was far less of it going on. There were far fewer researchers and academics who were interested in exploring this commercial path. There was less support coming in from the universities to help them and from governments to help them. Far fewer investors interested in putting the money in, and just less expertise, less experience. So these days you've got a lot of researchers who can tell fantastic positive stories about their experience of maintaining a career as a successful scientist and academic, but also getting involved in commercialization projects and enjoying it and enjoying some success from it. And investors who have the experience now of helping the companies grow and develop. In terms of comparing with others, we're really good at this in this country. I mean, number one, UK universities are very strong globally. So I think it's 4 of the top 10 universities in the world are based here in the UK. The Russell Group, a group of the 22 strongest research universities in the UK. You look at those, the research power there is phenomenal. So we've got a great sort of feedstock, if you like. And then tech transfer capability in this country is very strong as well. And so when we compare with the US, when you look at actually, rather than just comparing everywhere in the UK with Stanford or MIT, when you make a fair comparison, the UK is right up there, and the decent UK institutions are way ahead of many of the US institutions in terms of supporting opportunities like this.
And with regard to EIS, there's been lots of changes last year which made it much more attractive for people to invest in them and for the businesses themselves. Can the government do more, Sandy?
It's always a challenging question, in terms of tax and the current government strategy. I think EIS has been incredibly helpful in terms of this space in the market and bringing more capital to be deployed. And I think that is a very positive thing. And I think the investors who took advantage of EIS in the early stages are now starting to reap the rewards of that.
Yeah, I think the changes you're talking about, the knowledge-intensive companies, probably makes a bigger difference to the more established companies, because what the government has introduced is these higher limits for knowledge-intensive companies, and actually the University Spinouts pretty much 100% qualifies those sorts of companies. But it means that we're able to deploy this higher lifetime limit of £20 million into one of those companies, and that means that those companies are being able to use longer-term funding from various sort of tax-efficient space funds like Mercia and Parkwalk, are able to deploy bigger quantums of investment over the longer period of time, and that's just all helpful to the space. It means those knowledge-intensive companies, can attract more funding and gives them the better chance of succeeding.
So to summarise, it's a great investment area with potentially very, very high returns. It is risky, but at the same time, with the tax relief and the fact that all these ideas typically go through a transfer office which filters out a lot of the rubbish, then actually your risks are quite mitigated. So it sounds like a very good deal for high net worth investors.
Yeah, absolutely. And I think the key factor is be able to look at a professional fund manager who is looking to invest in this space, has the expertise to invest in this space, and the knowledge to continue investing in a high technology portfolio.
Enrico, Sandy, Tom, thank you very much.
Thank you.